Are gold's dreams of $2,000 dashed for now or simply on hold? We're speaking with one of the most esteemed voices in the precious metal space today. It's an honor always to have him on my show. He is Pierre Lassonde. Pierre, welcome back. Nice to see you. Welcome to my new show here at Stansberry Research.
Well, congratulations, first of all, and always happy to speak with you, Daniela. It's always a great opportunity.
I appreciate that very much, Pierre. As I said, you are an esteemed voice. When you speak, people sit up a little straighter, especially in conferences where you're often the keynote. You co-founded Franco-Nevada. You have sat on the World Gold Council. You have been president of Newmont. You are an incredible philanthropist to universities across Canada and the US. So you really are a voice of reason. And that's why I had to bring you on to help explain and bring context to what we're seeing in the gold space right now. Many were excited with the rally we saw over the summer, but gold's struggling here, Pierre. Struggling. We had hit close to 2,000, come back down. What's it going to take here?
It's interesting because in a way, it's always the same story, the same, but the plot is always a little different. And what's pushed gold this year to $1,900 is really the amount of money that has flown into the gold ETF. If you look at the gold ETF, there's almost 1,000 tons of gold that has been purchased by gold ETF, and the what do you call that? Response, if you want, for every 100 ton that you purchase, the gold price goes up essentially by $30 to $45. So the increase in the gold price that we've seen this year has been in large part due to the gold ETF. And it was bound to, at one point, stop, okay? It's the largest inflow that we've seen ever in the gold ETF. And for sure, it was caused by all of the deficits that we're seeing around the world and the fear of the monetization of the money. So it's taking a breather. We're seeing actually a bit of withdrawals from the gold funds, and that's what's essentially reflected in the gold price. Because if you look at the jewelry sector, the jewelry has been crushed. Okay, if you look at China, India, which are the two largest gold buyers in the world, the demand there is down over 50% year over year. So that's what's happening in the gold sector. And I've been telling people, like, expect a lot of volatility in the fall around the election, around the uncertainty of what the new administration is going to do, around the uncertainty of any further fiscal and financial packages. And until I think the new administration comes in and we have a bit more certainty, I think you're going to still see a lot of volatility.
So Pierre, and I think you've summed that up brilliantly, really, because if you look at the headlines, they're blaming it on news of a possible vaccine, and that's why gold's taking a hit. They're also saying we're seeing major liquidity, people cashing out of their gold to buy Bitcoin. What about these two equations here, sides of the story?
Fundamentally, nothing has changed today from a month ago or 2 months ago. If you look at the world economies, in fact, it's getting worse, okay? You look at the pandemic in the United States, it will peak more than likely around Christmas. Even though they're going to start rolling vaccine out, the holiday that's starting Thursday is going to be a super spreader event. And it will peak 3 weeks later, so like right around Christmas. And the same is happening in Europe and everywhere else. So the economy in the first half of 2021 is going to be decimated And what are we expecting? They're going to, whether it's the US, Canada, or Europe, they're going to have to do some really incredible fiscal packages in the trillions and trillions of dollars. And that money will flow directly to the people. They will write checks straight to people to help them, buy food. I mean, you look at the food banks in the United States. I was watching a TV this morning. They're running out of food because people have no money. And because their jobs are gone, and who are suffering the most is really the frontline workers, like the people that get dismissed because their job are no longer there. So nothing has changed. We are in a waiting period until the Biden administration comes in, and are we going to see a $2 trillion package, a $3 trillion packages, or even more? Because I think it's going to take probably more. And we're going to see a lot of bankruptcies coming in. So to my mind, nothing has changed. And the gold equities always kind of like are forward looking. So the gold equities are down like 20, 25% from their top. They were signaling that the gold price was going to come down. That's what's happening. And what you're going to see is the gold equities are going to find a floor probably very soon, which will signify that the gold price has reached the bottom. And by January, I think we're going to see new highs.
And just on your point about, food banks running out of food, I've been saying this for such a long time. There's such a huge disconnect between the reality for so many, Americans, Canadians, versus what we're seeing in U.S. equities here, Pierre.
Mm-hmm. There is a huge disconnect, and there's just too much money flowing out there and too much hope. People are looking over the valley and say, we're looking at the next mountain, but they always forget that first you have to go through that valley, and that valley is coming.
I mentioned Bitcoin before, and speaking about mountains, Bitcoin aficionados celebrating as they're closing in on $20,000 price, and there's a lot of scoffing going on at, oh look, gold can't even get hold steady here at 2,000. What do you make of these comparisons, Bitcoin versus gold, and thoughts of people wanting to sell their precious metals to buy Bitcoin?
Bitcoin and gold are two entirely different markets and not even comparable. Bitcoins are essentially a piece of mathematics that can be essentially replicated, invented, duplicated, and manipulated all you want. I mean, if you look at the Bitcoin world, for example, the 80-20, for example, who owns 80% of it? It's probably like 20% of the owners. And essentially, it's a very, very tight market that you can get any price you want. I mean, if you control 80% of the stock of a company, you can, make it worth whatever you want by just purchasing 1,000 more units in the market. And I think that there's a lot of it going on in the Bitcoin world. The gold market is $1 trillion market that's disseminated around the world, and it trades openly in London and whatnot. Very, very different world.
Pierre, I want to talk mining now. I know in the past we've spoken and you've said, look, at these levels, miners have the fattest margins ever. This should be party time for miners here. Now, this was a few months ago since we last spoke, but what are you seeing and what are you hearing from the mining world?
What I said 6 months ago is even more true today, Daniela. The profit margins of the mining companies like the Newmonts and the Barrick and the Agnico Eagle at $1,800 gold, essentially they're making $1,000 free margin for every ounce they mine, if not more, because their all-in cost is $800 an ounce or less. Right. All in, okay? So they are making the fattest margin in history. And with the oil price, essentially at $40, those margins are going to stay on for years to come, in my view. And what are they doing? They're increasing their dividend. They're buying stock back. They're returning money to shareholders.
Pierre, if they will be spending more money, and we've already seen it on exploration and discovery, and should we be finding great new gold deposits, would this hit gold price? Would this be counterproductive to the gold price?
Well, it doesn't matter right now what they do in terms of the gold price, because production actually this year will be less than last year, and next year will be less than this year. Okay, like, the cake is baked. All right, like the reserve that they have, the mining plans that they have cannot be changed because the gold price goes up like $100. Okay, like they make their mining plan for the next 3 years, and those, again, the cake is baked. Okay, like there's nothing that you can do. And if you look at the worldwide production of gold over the next 3 years, it's going down.
Is the gold not out there, Pierre?
It is out there, but first you have to find it, which takes an awful lot of effort, and two, you have to permit it, which is, any, depending on which jurisdiction you're in, it's a 3 to 7 year process.
Okay, but you do.
It's time.
Are you confident that we will find that great big next juicy gold deposit?
Well, if 20 years ago, I believe that yes, we would find it, but so far in 20 years, we haven't. If you look at the really big deposit, the 50 plus million ounces, the last one that I know of was Yanacocha in Peru. And before that was Gold Strike in Nevada. I'm talking like the really big, juicy, pure gold deposit. I'm not talking copper gold deposit, because there are a few that are around. But in terms of the pure gold, we haven't seen any of those. And even the 15 to 30 million ounces, we've seen precious few in the last 20 years. So are they out there? Absolutely. Okay. It's a matter of essentially spending the money, going to drill them. And I think that with risk on now, we're seeing a lot more mining companies, a lot more junior company doing a lot of exploration. So I'm encouraged. I think that over the next 2 to 3 years, we are going to start to see some really interesting new deposits.
Pierre, just going back to the gold price here, in past talks, we've spoken about $15,000 to $20,000 gold. Of course, you said this is if we would see a Dow Jones to gold ratio of 1 to 1, which we have seen in the past. Has this narrative?
This is my favorite topic.
Right?
Yep.
You love it. I know we've spoken about it ad nauseum, but people love hearing it from you. And they love talk of $15,000, $20,000 gold. Has the narrative changed for you?
Actually, absolutely not. And I'll tell you why. If you would ask me, and you did a year ago, okay, what will make gold go to parity with the Dow? I could not have told you. And I said, I don't know. But today, I don't. And it's COVID. It's the pandemic. It's the response, the worldwide response of governments, and the amount of debt that they've taken on in response to COVID, and the amount of debt that is being essentially monetized is what's going to cause the ratio to go to 1 to 1.
Wow, interesting. So COVID taught Pierre Lassonde something.
Yep. Well, it taught, I think, everybody something.
Oh yeah, but but you're like,
But what's happened with COVID essentially is that, and it's the same. COVID has done the same thing for social media, and it's done the same thing for all of the online shopping and everything else. It's compressed the time frame of adoption for all of these technologies from 5 years to 5 months because of necessity. Well, if you look at government debt, for example, we were on a long trend basis of more and more government debt. All of a sudden, COVID happens, and what would have taken 10 years to issue $3 trillion or $5 trillion of debt, it all happened in 1 year. And this is essentially the root cause of gold price going higher, is the US dollar is going to go lower, because they're going to issue tons and tons of money.
And I think COVID is the only thing that could have stopped Pierre Lassonde, because you are always on the go. I mean, I would be speaking to you and you'd be like, I have a flight, but I'll be back tonight. I mean, you are nonstop. So it's grounded you.
Yeah, it has grounded me, all right. That's been a whole new experience.
But you're still smiling.
Oh, yeah. Oh, yeah.
You're
I
still
mean,
smart.
I'm doing things differently. But one of the good thing is it's giving me time to spend with my own family. And I think that that's been a real blessing.
On that note, Pierre, I wish you, I know you're in Canada, but I know you spent a lot of time here in the States. So happy Thanksgiving.
Well, my wife is American, so we
There you
will
go.
celebrate anyway.
There you
And yes,
go.
we will see 1-to-1 ratio on the Dow Gold.
Okay, well, I'm going to invite you back. We'll talk some more. Pierre Lassonde, it's always a pleasure. C'est vraiment un plaisir. Merci, Pierre.
Merci beaucoup. Thanks.
And thank you for watching this installment of Stansberry Research. We'll have much more for you. Be sure to follow us on all our social media. We're on Facebook, Instagram, LinkedIn, and Twitter. In the meantime, thanks for watching. I'm Daniela Cambone.